The P in XRP stands for please go up. It's not working. Why is it going down? This year, we've heard some of the most positive news in history for crypto. And this week on Just Another Wednesday, we found out that the SEC is dropping its appeal against Ripple.
I'm finally able to announce that this case has ended. It's over.
Years of uncertainty has now transformed into clear skies. This led to an 8% spike in price, which feels a bit underwhelming, especially for long-term holders. Most of us aren't here for returns that the stock market can give us in a single good year, and let's be honest, nobody is here for a 2x. We're here for the moon! Hi, I'm Raj. On this channel, we talk about money, and we're going to explore what really drives crypto prices to new euphoric all-time highs. Because if a major win in the highest profile legal battle in crypto isn't enough to get things going, it's gotta be something else. I can't give you financial advice, but from my 7 years in the crypto markets, I and others have noticed that there's two key things that have to be present based on history, and we'll go over what those are as it relates to XRP and crypto in general. But there's a very real possibility that this time might be different, where we don't need those things to be present, and we'll go over some interesting rumors that might be foreshadowing XRP's future. First up, we need confidence, meaning confidence that what we're putting our money into isn't going to go straight to zero overnight. In 2017, XRP exploded in price action along with other coins in the market. In 2021, after surviving a bear market, XRP was still a top crypto by market cap, but didn't break all-time highs. The major difference was that Ripple was in the early days of the lawsuit in 2021, and naturally, the market wasn't very confident on the outcome. The accusations alone were enough to shake almost everyone from the project. Fast forward to today, with multiple reports of banks using XRP, legal victories, and high-profile individuals mentioning it, it seems that XRP is stronger as a project from 2017 and 2021. Confidence is at an all-time high. So it's pretty clear that's covered, but that's not enough for its own crazy price action. Which brings us next to confluence, meaning we need a number of other factors to line up at just the right time for big green candles to appear on the charts, so let's get the data. The first chart I want to show you is the money supply. The M1 money supply measures how much liquid money exists, like circulating currency and money in checking accounts. The M2 money supply provides a broader view, which includes everything from the M1 money supply in addition to money in savings accounts, certificates of deposits, and retail money market funds. In other words, money that can easily be moved around from a lot of different sources. If you compare the price of Bitcoin to the M2 money supply, we see an extremely strong correlation. Since 2014, the overall trend is that there is more money available and the price of Bitcoin follows the ups and downs. For the crypto markets, Bitcoin is the largest magnet that draws attention and money to the space. Historically, BTC was the gateway to altcoins. I mean, just a few years ago, it wasn't even possible in a lot of situations to buy altcoins directly with traditional currencies. You had to buy Bitcoin first, then trade it for your altcoin of choice. Today, it's significantly easier thanks to places like Coinbase offering altcoins directly on their platform. Even with less friction for people to get into altcoins today, Bitcoin is still the dominant asset, and that leads us to evaluating the Bitcoin dominance. It's pretty straightforward. This chart measures how much money is in Bitcoin compared to the rest of the crypto markets. And why it's important is because money historically has flowed from Bitcoin to the altcoins. When Bitcoin dominance has fallen, this is a great setup for altcoins like XRP. And taking this a step further, comparing XRP to Bitcoin directly, we see periods of outperformance, meaning XRP is doing better than Bitcoin, and periods of underperformance where Bitcoin was the better buy in comparison. But of course, none of this matters if no new money is flowing into Bitcoin. And in order for that to happen, we need to see traditional markets do something first, which of course brings us to the S&P 500 and the Russell 2000. The S&P 500 are the 500 most valuable stocks by market cap in the US markets, and the Russell 2000 is the smallest 2000 stocks of the Russell 3000, which measures about 95% of the overall market. To put it simply, large US companies versus small US companies. Looking at the chart, we can see the gap between them is getting larger and larger and larger, indicating that more money is actually flowing into the S&P 500 or large stocks more than the rest of the market, which leaves very little to flow into even riskier assets like crypto. So what's the bottleneck? Interest rates. Interest rates are to asset prices what gravity is to the apple. When there are low interest rates, there is very low gravitational pull on asset prices. Warren Buffett said that, and he's got a net worth of about $160 billion. He probably knows what he's talking about. This is why every time an FOMC meeting happens, all eyes are on Jerome Powell. I wouldn't be surprised if people in the finance space start becoming experts in body language and speech pattern analysis. Generally speaking, people are just looking for any sign that the Fed will lower rates. Lower rates means money is less expensive to borrow, which means more money can be loaned and then used to fuel growth, but also means that there is less cost for a business, and this allows for room for more riskier assets like crypto. XRP is proven to be one of the strongest coins this time around, and it seems that we're just waiting for broader markets to open up, which would allow for risk-on assets like Bitcoin and other cryptos to benefit as well. However, maybe all that doesn't even matter. With all this positive news, little glimpses of the future start emerging, and if XRP starts to get used more in the world of global payments and financial transactions, this increases use, which increases demand, which would lower supply and drive the price up based on use case and actual adoption. Now, these are unverified rumors, but Watcher.guru, a large crypto news account on X.com, reported that Swift is nearing an agreement with Ripple to use XRP for cross-border payments, with billions of XRP secured in escrow as liquidity reserves. This was also posted on Facebook. The posts were quickly taken down, and Watcher.guru reported it was hacked. This led to some criticism, and ultimately, this news for now is just part of the rumor mill. But it is a little strange that a hacker would choose to post about XRP and Swift when they could have posted about anything else. The whole thing is a bit odd, but it does point out to a scenario of use case of a crypto asset making macro conditions not nearly as important as actual adoption. So is XRP ready for all-time highs and euphoric price action? Based on the data, we need liquidity to flow from big stocks to smaller stocks to Bitcoin, then altcoins, and the key holdup seems to be interest rates. And ultimately, large-scale use of XRP can make all those things unnecessary for price action. Maybe it happens all at the same time, but that's called hopium. Let's not get carried away. Until that large-scale adoption happens, the best thing we can do is use data to our advantage, and in less than 7 minutes, I'll teach you exactly when to buy and sell crypto. Link down below if you're on mobile. Thanks for watching, and I'll see you over there.